Good afternoon and welcome to the FX Daily. We have seen the dollar CAD come right back off here. We had come in yesterday and found some nice support here. Yesterday we actually had our bias chart support at 31.36. The market come down to 31.40, but that confluence here with this exponential with the Fibonacci at 61%, we saw a nice rebound, got us up to what, 31.91. Today's bias chart resistance was 32.05, but we've since rolled over. We saw a pretty nice run up in crude, but we actually saw the crude come off. Obviously, some concerns also with Bolton, being fired. But we've seen this dollar CAD certainly make a move lower. Now, once again, we do have a support level coming in at 30.36. That was yesterday's bias chart support. I apologize, 31.36. So you're probably going to see a little bit of a bids coming here, maybe a little bit of short covering here, but we've seen this pullback. We've also seen the Australian dollar move higher. I'd taken a couple of stabs at the Aussie yen, and I still have a position there. I added and then scalped around, but this is actually showing a buy signal, at least on the exponential moving averages, and we're going to move into that. Bear with me. Right here, you see here with the Aussie yen, we've seen a pretty good little run up here, and we came. You can see right here, this was our bias chart resistance. We always put those in the pink lines. It makes it easier, if you're looking through, a plethora of charts, it's easier to quickly see, it bumping up against a key resistance level, or generally what I'll have is my bias chart. This is just one screen and that's some other screen, so it makes it much easier to say, wait a minute, we're moving into something real quickly, unless I'm already looking at that pair. And yesterday we came up here just about nicked. I think we missed it by a pip or two on our bias chart resistance here. And we paired back, but we've since come back in here. You can see it here on the 2-hour chart. So that was from yesterday. We basically nicked it, maybe came a pip away from that. But the 73.87 is a 61%. So I believe we kept the same bias chart resistance. We can pull this over here on the Aussie yen, 73.86. So that's our bias chart resistance from yesterday. That actually confluences with 73.87 to 61% of the move of 69.96 to 76.29. You can see that right here, right there, and coming in right here. And that comes in at 61% with 73.86 actually being our bias chart resistance. Nicked it. And we're kind of pushing a little bit up here. If you look on here, this is a bit of a concern here, though, is we do have a little bit of a hammer. Now, it's not after a fall, so that'd be different if after a fall, but we just ease back. But my broader concern is actually, and if you look on here, this actually was cupped by the slower exponential moving average, but generally I go with those on the 30-minute, and you can see here that we just generated a buy signal here, so have to be a little bit careful on this, but we may see the Aussie, we've already had a pretty good run, hopefully go and see this thing back down a little bit, but just kind of scalping around in here. And let's take a look here on the main page. And we've seen the dollar yen make a nice little move up in here yesterday. Yesterday we had our bias chart resistance at 730, and we did make a move up in Asia, and I was able to get up a little short there, but up in here right ahead of the 61%, we backed down, but we're still trying to reassert ourselves. And a lot of that has to do with, and we're going to be jumping all over the place, so bear with me, a lot of that has to do with U.S. rates. And you can see here 10-year yields have certainly made this push, and to me I think it's really more about a lot of people trapped on the wrong side of what they perceive to be a one-way trade, and we've seen this 10-year yield just climb and climb and climb. Now we had a pretty good resistance here, and this is what we were looking at, or at least I was looking at and speaking about in the chat room in Asia. Once again, like I said, if you get a try or ForexAnalytix, we always have people there not only in the European trading, U.S. trading, but also in Asia. And this is where I went and put on that short with the dollar yen. I did want to get out of it as we took this secondary dip here this morning in the U.S. session. But you can see here that this was a good little area here at 65.70. And I would think that they would kind of run out of gas, and they are starting to right here. If they were to squeeze much higher, that would get us up to 170, and 170.04 is actually the 38% of this entire move from 143 to 214. So, but I think we're gonna, like I said, we saw this market moving higher, and I commented about an hour and a half ago. I mean, I know they're trying to push higher, but I think that I think we goose some stops above here and above this high right there, and that pushed it and a little bit more. But we'll see what happens. But it could look for this thing to take a bit of a respite. Also, it's not the same thing, but to me, it seems hard to see the 10-year yields continue to climb as we go into ECB. Now, I'm not saying that they work hand in hand, but I'm just saying this for this to be going in a complete opposite direction, and not only going in a complete opposite direction, but literally zooming in an opposite direction. So I would think that we will probably look to this to ease back a bit, maybe come back in here to challenge into the 165 area here, which takes us down about 3 or 4 basis points. But certainly we've seen the bonds come off quite a bit here. But then look at the phenomenal run they've had all year long. I mean, look at this. This is just nothing short of unbelievable. Look going all the way back to January. Look at this. It's been quite the run. So I don't think, and then also Germany's looking to do its own stimulus. So that's kind of taking a little bit of the wind out of the sails for the ECB and provide a little bit of a bid for the euro. Now we did see gold going to take a dip down, came into an area that was a pretty good, decent area for support, which is 1494. But we did take another stab lower yesterday. And one moment. Okay, one moment. There we go. So here's that 1494, but we took another extra dip down here and close to almost 1485 before rallying back up. And then here we are rotating back a little bit lower. It appears that gold really does want to get at least one more stab a little bit lower, probably before we get some more value buying, and that may come in maybe around 14, potentially down here to about 1460 if we take one more stab and really clean out the folks here. Bear with me. So let's go back into the main screen. Still 10-year yield still looking pretty firm up in here. Look at that. And dollar yen trying to get a little bit more of a bid as those yields move up higher. Aussie dollar, in the chat room, Blake made shared something that a gentleman had indicated on a tweet that there was going to be a lot of buying of Australian dollars this week. And that may have given the Aussie dollar an extra lift on the bid. So maybe we'll see this thing finally rotate a little bit lower. Look at this. This has been quite the run that we've already seen here. Let's move this into the 2-hour chart. I like this. I mean, I don't use the 4-hour charts. I will use it on like on yields, like, if I'm looking at bonds, but I pretty much stick to the 2-hour charts as my longer term view other than a daily. And then, but I'll tell you what, the 30-minute charts, especially working with the exponential moving average, just really works great. Everybody's got their own time frames to look at. Some people look at hourlies. But anyway, nonetheless, you can see we've had quite the phenomenal run here with the Australian dollar. We may want to come back, and here's that key level, that 68.34. So maybe we can come back and pair back in a bit here, and down here at least. But I'm thinking that potentially we can come down here to 68.23. We'll find some value there. So if we do rotate lower towards the end of the week, I'm looking here to 68.23, maybe as low as 68.12. Okay, if they go in and overshoot the 68.34. Look at the cable. Talked about this not only in Asia, but also in the European session that we had option expiration of 1.8 billion at the 23 handle. Well, we rotated there in Europe and we got as low as 2307. 2307 actually was the bias chart resistance yesterday. So we actually resistance then became support on the way back down, and we saw a nice little rally off of that. I was noting, and I didn't get long. I haven't really done anything with cable in a while, but kind of kicking myself for that because I was even noting here, I go, they're probably going to have a tough time trying to break beyond 123 with a $1.8 billion, option expiration. Sure enough, we held there, and then we just started, moving higher. Looking at the peso, we saw a nice little rebound on the peso from that 1950, and we actually kept that as our bias chart resist support this morning, and we saw a nice little rebound up here to about 1959, but we since have rotated lower. There was also something that came out over the squawk service that the Mexican minister was saying. I think it was the foreign minister was saying that the peso was was a risky level. And I thought that was a little bit odd to go and say something like that. One of the guys in the chat room said, well, he probably just wants to have a lower currency. And that's, true. Who doesn't? But still, it's not the kind of thing you'd say. But that being said, with the pair back in oil, that may have also aided in here, or, but nonetheless, we did go on and see this market really start to slide back hard. It did from that level. Looking across the board, other than that, Euro's trading relatively quiet ahead of the ECB. We did see here with the dollar CAD going and take that pretty good dip, and we had data this morning, but nonetheless, I mean, we saw a nice rebound up in here to about 31.91. We had our bias chart resistance once again at 32.05, and then since then we've really fallen off quite a bit. But remember, we had yesterday's bias chart support was 31.36, and we stopped at 31.40. Well, here we are. We just tagged the 31.36. So probably see a little bit of short covering coming in at that area. Dollar index is trading also relatively quiet. Not really seeing a whole lot happening here. I will go into another pair here. We talked yesterday about the Swissy, and remember we were talking about that, and I said, hey, look, you don't want the Swissy to close above 99.05 on a daily. And certainly that's what it did, and we saw this thing really make an extended move up here, really on the backdrop of the Euro Swiss moving higher. So we came up here to this, I think it was 93.31. This high right here was 93.32, so we didn't take it out. But I tell you what, we saw a nice little pullback here. I know Amir had been short yesterday, and he kept his short, and he was able to get out sub 90. I think he got out for 26 pips or something like that. But I think he was short from 99.12. But we did see this thing make a run up here in Asia. Look how high it got up to 99.31. Or 99.30, 31. I think the new highs or highs on the move would have been 33. So gently we started pairing back. We saw a pullback into this area. You can see this little zone here before getting a nice little pop back in here. But the one who led it higher initially was the Euro Swiss. I had been short on a scalp and wide. I ended up jumping out of 99, but that was yesterday. And then we did see that move up in here, but I wasn't going to have any part of it. But it would not have been a bad little short up there. But at the time, like I said, we already were looking pretty good. We even had a solid buy signal there. You can see here we actually crossed into a sell signal. So when it jumped up, if you're trading it, and I don't trade the Swissy that often, but offered a nice opportunity, and then we saw this market roll over. One of the things I have noticed is, like I said, these markets do love to move on momentum. So it really helps if you use, like an exponential moving average, because it's going to react a lot faster. Some people, I don't use RSI, I don't use stochastics. And maybe that's, maybe it is good. Maybe I would consider RSI. I haven't used in the past, maybe using a daily chart. Everybody, like Blake says, many ways to go on and trade a market, i.e. skin a cat, but many successful ways that people use. For me, I don't, like I said, I feel more comfortable just looking at the charts, the candlestick levels, as well as Fibonacci, and I use my exponential moving averages to go on and gauge me in as far as momentum. But that's what works for me. It's everybody has their own different perspectives. I pretty much just scalp, maybe a little bit of day trading, but pretty much I like to just scalp. And one of the things I've found it easier, and quite often I've told you on multiple times, is more often than not, I find myself too early. So I've been trying to work on that. And one of the things that is helpful is using the exponential moving averages. And you can see here, this market was still going higher, but once that exponential moving average turned off, look how we came back. We rallied back in here, some decent little resistance coming in around 99.20, and then you see a pullback. But when you do see that, then you have the momentum going for you, working for you as opposed to against you when you're trying to sell it, going the other way. Kind of seeing that same thing right now with the Aussie yen. Getting back to the main screen, obviously we're going to have ECB coming up, and that's about all that we have for today. But thanks for joining us here on the FX Daily Roundup with ForexAnalytix. They are seeing the dollar yen still pushing up a little bit of a bid as we still remain firm on 10-year yields. Have a great rest of the trading day.